Maintaining your cybersecurity insurance is not just about paying your premium. Each year, insurance providers get more and more specific on what organizations must do to maintain their coverage. Let's talk about the best ways to ensure compliance and to not be forced to establish additional measures on the fly to keep your insurance intact. Hi, I'm Steve Murphy. I'm a vice president at ARG, and while I work for ARG, this video is my own and does not represent the views or opinions of my employer. This channel is dedicated to helping IT leaders make great business decisions. And while cybersecurity insurance is not necessarily an IT decision, it is one that IT must support for the insurance to remain valid over the course of the policy term and to give the organization an opportunity to renew at reasonable rates. According to industry reports, cyber insurance companies have been losing money on their underwriting for several years. The industry struggled to find a balance between coverage and premiums. Charge too high a premium and they lose customers. Charge too low a premium and they lose money. What's made life more complex for insurers is that cyber risk exposure has been growing at about 30% year over year. So a rate that might have made sense last year is inadequate to cover the underwriter's risk this year. Industry-wide, insurance companies have been more interested in acquiring clients than turning a profit. These past 2 years, however, everything has changed in the industry. On the heels of dramatic compromises such as SolarWinds and the Colonial Fuel Pipeline, and with recent studies indicating that the chance of having a major cyber event is about 33% each year, or one significant event every 3 years, insurance companies have grown more conservative. Rather than doubling their premium, as industry observers have indicated is necessary to make cyber insurance viable under current risk profiles, insurance companies are requiring very specific security elements to be in place and functioning, as well as alerts and alarms generated by the security elements to be addressed on a timely basis. If you can't comply, well, no insurance for you. Insurance companies are now walking away from non-conforming businesses. Oh, and even if you do comply and are offered a renewal, expect a 50% increase as well. It's a tough business. Cyber insurance questionnaires are pages long, and many of the questions now require physical evidence or artifacts. Don't be surprised if your underwriter wants you to have an annual penetration test, and they'll want you to see the summaries of those results. And don't be surprised if they ask you how you've addressed the most critical elements of that report. They may request your most recent vulnerability scan or a screenshot of your SIM or EDR portal, your SSO platform, your MFA platform, provider, etc., etc. To be honest, insurance companies no longer trust self-reporting questionnaires. They want evidence of compliance, not just attestation. Then, if you have an insurable event, they will ask for evidence that your point solutions were up and running properly and being maintained. If they were not being tended to, the insurance company may deny coverage for that event. This is one of the major reasons we recommend managed detection and response services. Are they perfect? No. But are they better than anything else most companies can provide? I believe so, and also I believe that they can achieve your goals less expensively than you can achieve them yourself. I have an MDR video in the description of this video if you want more information on that. Before we get into how IT can stay in compliance and not be blindsided with cyber insurance requirements, I need to speak to the self-insurance strategy as well. Some organizations, in evaluating their cyber liability insurance requirements and costs, have decided to self-insure. That is, going without a commercial cyber risk policy and just paying for the cost of an incident out of pocket. These organizations typically have not had a significant incident in the recent past. And self-insurance may seem like the best financial decision because cyber risk policies, as I've mentioned, are ballooning in cost. However, unless you're in the Fortune 500 list, I recommend against self-insuring. First, no one knows how expensive the next incident may be. Basing your future costs on past costs is very risky. Second, cyber insurance is becoming a requirement for business partnerships and client relations. Not having insurance will certainly complicate future strategic relationships with other companies, if not downright prevent them from happening. Now, on to the dance with the cyber liability provider. So from my perspective, the most critical elements of your cybersecurity practice to qualify for insurance is the degree of proactive maintenance and monitoring you have in place. Of course, jumping to the level of proactive measures assumes that you have the basic protective measures such as commercial grade, next generation firewalls, endpoint protection, multi-factor authentication, and so forth in place. Those are the basics, and if you don't have those, we need to talk immediately. But now proactive maintenance and monitoring are important to insurance companies because when, and I did not say if, but when malware slips through your basic defenses, a strong maintenance and management or strong maintenance and monitoring platform will limit the damage. If your maintenance program is documented and you can demonstrate that you're patching and upgrading systems quickly, your attack surface remains small. That's good for the insurance company. Cyber insurance companies also want to know that you stand a good chance of catching malicious behavior before it spreads across the network. That's where strong monitoring comes into play. Maintenance programs to cyber insurance are like putting on your seatbelt to auto insurers. It's a habit that significantly reduces the impact of a potential accident to the occupants, the most expensive part of an auto accident. Extending the auto insurance analogy, defensive driving is like proactive monitoring. As a defensive driver, you drive cautiously, constantly aware of your surroundings and making minute adjustments as potential threats appear. Taking small steps to avoid a larger potential exposure is a major pro for the cyber insurance underwriter. Be sure you can access an inventory of all your covered assets and what protective measures you've applied to each asset. Insurance companies may want to know what they're insuring and how much exposure each asset represents. I mentioned multi-factor authentication earlier. I won't say that you need MFA for every user, but it's a good practice. But not everyone fits that environment. At a minimum, you should have MFA for anyone with admin rights. All remote users and others with broad network access or access to critical assets should also have MFA. Be able to document that you've had a third-party penetration test within the last 12 months. Preferably, the test should be performed by a live tester organization. They will use automated software, but then have their ethical hacker conduct additional tests based upon the results of the tool. Vulnerability scanning is also a must. Many companies can still get insurance by scanning annually, but quarterly is becoming more commonly required. Documented incident response policies or even having an incident response organization on retainer will help you lower your insurance rates. Again, it's about how small you can keep the impact when the worst happens. And lastly, evaluating the security posture of your business partners is something that we see as an emerging topic in insurance underwriting. Insurers want to understand what due diligence your organization is performing towards organizations that you might be exchanging emails with regularly or having employees in each other's space or even potentially connecting networks. To stay ahead of the insurance company's requirements, I'd suggest establishing a relationship with the account manager from your insurance company. During your strategic planning or budgeting or just periodically, ask the account manager for a copy of their most recent requirements. If you know what proactive threat management will be required in your next renewal cycle, it's way easier to ask for that in your next budget rather than discovering the requirement randomly during the insurance renewal process and then having to scramble to implement a solution under the insurance company's timetables rather than yours. If you'd like to talk about any of the topics here, I'd be happy to do so. My contact information is in the description of this video. And if you got some value out of this video, I'd appreciate a like, a thumbs up, and thank you very much for doing that. If you want to find your way back to my channel in the future, the easiest way to do that is to hit that subscribe button. That will put my videos in your feed and allow you to come back at your convenience. Thanks very much for watching, and I hope you have a great day.